This is a video chart presentation of Starcore International Mines. Starcore trades on the Toronto Stock Exchange under ticker SAM. This chart caught my eye because of the slow upward channel it's making. Just higher lows over the last 6 months, slightly higher highs. You can tell us by looking at this chart it trades a little choppy. That's because it can have some pretty sporadic volume. Thursday actually wasn't a bad day for it, 118,000 shares traded. But it can have some days where it pulls in a lot more volume. 500,000 shares, a big day through here, can be about 1.5 million. But point being, it looks like it can move fairly easily without huge amounts of volume. What caught my eye is the general pattern it's making, and I want to see if it's going to come off this base and take its way back up to the 50 and 200-day moving averages. Maybe getting some hints of that happening as the MACD moves back towards zero. Of course, as we always talk about on bottom plays, a big key for us is to see this MACD move through zero and then hold above it. You can see right through here, break of zero, stock price moves up. Back down, back up through it, stock price takes off again. Even on a retrace, holds that zero mark, stock goes through and makes a new high. Conversely, when it was trending back towards zero right through here, didn't make the break, stock price went lower. So we'll be looking for that move back through zero and some upward pressure to follow. Slow stow is holding over top of 50. That's a sign that bullish momentum is trying to be sustained in the play. Money flow index is also on the upper half of the indicator, a sign that the stock price is currently above its 14-day average price. Relative strength index, the 14 is only at 48.5. It's pretty neutral. But we want to see that RSI over top of 50 and holding that position to show that the bulls have control of momentum. Now this isn't some steep upward channel. You can see it definitely is an upward path. Now I'll be looking for some ground level support down at 16 cents in order to try and keep this series of higher lows. A break below that, I'd say the odds are pretty good it's going to come back down and try 14 again, which is a pretty decent drop from closing at 18 on Thursday. What I'm primarily looking at is this 50 and 200-day moving averages sitting right in front of the current price, and they actually happen to tie in with an old resistance point from back here in 2013, right through that area, about 19.5 cents, which also served as some short-term support points in the middle of this channel. So I'd say it's going to be the first tough spot for it. Beyond that, I see a little bit of resistance at 23, but I don't see it picking up until around 24 cents, which is a nice little upside from current levels. And if it breaks that, I'd be looking for this upward path to continue. If the stocks try and make a new high, perhaps somewhere around 28 cents or so. It's a pretty simple chart really, easy pattern to recognize, and because it's coming off this support, it's one we'll keep an eye on going forward to see how it performs. But as always, it's merely my interpretation of the SAM chart. I'm not a financial consultant, strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpenny.com website to view the full disclaimer disclosure, and do not base any investment decisions upon any material found on the website and/or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.